Good afternoon and welcome to this exciting IC Consult and Ping Identity webinar, where we'll be talking about unlocking the power of seamless, secure, and scalable digital identity in financial services. My name is Adam Price. I'm a Director of Product and Solution Marketing at Ping Identity. I've been with the company for over 3 years and in tech for over 12 years. And I'm joined by a heavy hitter here, Jason. Jason, do you want to introduce yourself?
I hope you don't mean that I'm overweight, Adam, but my name's Jason Good. Good afternoon. I'm VP for Southern and Western Europe here at IC Consult. I've been in the identity industry for nearly 25 years. So yes, if you mean a hard hitter in that way, definitely. And I've spent a number of those years helping financial institutions navigate the complexities of identity and access management. Great to be here this
Wonderful.
afternoon.
Well, thank you so much for joining us, Jason. Really looking forward to the insights. So a bit of housekeeping before we start. We'll be taking questions at the end. However, if you do have questions that arise during our talk, feel free to put them into the chat dialogue on the right-hand side. We will run for about between 35 and 45 minutes, depending on how the conversation goes. And this webinar will also be available to watch on demand should you have to dive off early. So with that, let's set up the topic. So, we have historically seen that, identity has been seen from a very much of an authentication lens in financial services industry. Historically, that has been. So when we think about identity, we always think about, well, how do I authenticate and log into a system? But actually, over the past 8 years, certainly as Identity Federation has taken root, we've seen a significant shift in that thinking. And actually, identity is becoming a critical enabler of not just the efforts to mitigate threat vectors in the industry, but also to achieve compliance and, very importantly, elevate customer experiences. So all of a sudden, identity has really moved up to the top of consideration. Investments in identity have increased. And as digital transformation in financial services industry has picked up pace over the last few years, it's many of the large providers have realized, particularly the incumbents, that IAM legacy can not just be an enabler, but actually in many ways could be a hindrance. And so there's been a concerted effort to modernize identity, make it work to fit all those business objectives, and to move towards a converged and sustainable platform. And so this is really at the core of our discussion today. So what we'll do first of all is we'll look at the landscape in financial services industry in a little more detail that's driving that. Then we look at how that's been driving value and connecting to some of the objectives, like, for example, combating the threat landscape. And then we'll talk into and dive into some of the kind of conceptual aspects that really make up what we call converged identity and access management space. So with that, let's get cracking. Okay, Jason. So let's get into the first meaty topic of our discussion here. So let's look at really the landscape and the scene that is driving identity transformation. And ultimately, in financial services, ultimately the key drivers of all IT spending decisions are really driven by the ambition to mitigate risks and to leverage opportunities to grow market share. And it's quite interesting, actually, because if you look at research, you're certainly seeing that imperative to mitigate risks is a bit more powerful than the quest to innovate. But over time, we've seen this significant shift where identity is effectively an enabler for both, for helping to mitigate risks as well as it kind of drives some of those kind of innovation-driven, opportunistic ways to expand market share. And it's no surprise, unfortunately, that compliance is also a big driver in this. So you see here on the slide on the left-hand box, we've seen a significant rise in the threat landscape. And Jason, every event that I attend to in the financial services industry always features and heavy conversation and dialogue on authorized push payment fraud, or AP fraud for short. I actually came across some interesting research. I think it was at Money Live this year in London, where one of the regulators actually alluded to a statistic which suggests that APP fraud is now a bigger threat vector than the account takeover attack vector, which is really, really telling. But needless to say as well, account takeover is also a significant threat vector. And we've seen that, again, that weak credentials and weak identities frequently the most vulnerable spot in identity armor. And unfortunately, malicious actors are very effective at exploiting that. We've also seen, as not just with the progress of AI, but generally speaking, with digital transformation, that the advent of synthetic identity has become a much more pressing problem as well, and impersonation has become a problem. So again, this is not just a question of logging in, but being able to assure a user's identity at the critical interactions that they have with a financial service provider, whether they're transacting money and they need to be verified for that transaction, whether they're having conversations with call center agent. That continuous verification is becoming much more important as well. And we're also seeing a significant rise in unauthorized access. I mean, there was one notable unauthorized access story that I saw in the press yesterday, Jason, where I think HP was compromised and 49 million records were compromised. This is not just about securing, access across consumer access journeys, but it's also about thinking about workforce and third-party provider and partner access journeys. There's a real issue there around over-provisioned access. And as we know, when we are in a state of an over-provisioned a kind of over-provisioned kind of state, the policy is over-provisioned, then that means that whenever we are compromised as workers, that individual malicious actor can gain access to the kingdom, so to speak. So this is becoming a significant issue as well. And I see in a data breach report that we ran last year that actually over 45% of all data breaches have been attributable to unauthorized access. So this is a significant threat vector as well. And then if we look at the regulatory kind of landscape as well, particularly in Europe, and I know we're largely speaking to a European audience here, the regulatory landscape in financial services is rapidly changing on the cybersecurity, digital operational resilience, payments front, decentralized identity front, and I've just listed some of those kind of regulations there, but there's a much longer list as well. So, financial service providers are looking for better ways to become more agile, to be able to achieve compliance, but also to leverage those investments that they have to make to be compliant, to drive a customer experience and drive differentiation, and be able to reduce the time it takes for them to be compliant as well. So that's a significant factor as well. And then the third factor that, certainly from my perspective, that I see is that the financial services ecosystem is growing very, very rapidly. And as we're moving towards, open finance, through open banking, into the open data movement, we're seeing that the ecosystem is growing rapidly. And, incumbents are partnering with fintechs, and tech fins are partnering with banks and other providers. So actually, we as consumers and the service that we consume, whether that's a banking service, there's just so many different third-party providers that are involved in that value chain. And so again, a key imperative here for financial service decision makers is how they can, secure that growing ecosystem, but also how they can become more agile and how they can shorten time to value and how they can reduce total cost of ownership around that entire estate. So that's significant as well. And from my perspective, if you bring that all together, really, you're seeing this emergence of convergence, and convergence is frequently an overloaded word, right? So we kind of see convergence really as a convergence between authentication, authorization, verification, consent, and governance use cases, consumer workforce as well. So you're seeing a move, and I certainly, Jason, I'm seeing when I speak to financial service decision makers, them really wanting to consolidate, right? It's really important to reduce that total cost of ownership, and they're really looking for maybe not one provider, but maybe a limited number of providers to deliver to all those use cases as well. So from my perspective, those are some of the kind of key drivers for this, but I'm interested in your perspective, Jason.
Gosh, Adam, so many questions and so much complexity there. When I think of the decisions that people have to make now within financial services institutions, it's what do I tackle first? It's almost like you're presented with this multi-headed hydra. You think you've solved one problem and another head grows, and you've immediately got another problem or another challenge to resolve. I think we'll all agree that there are great reasons why the financial services industry is one of the most highly regulated industries that we have, and equally, as we've seen the prevalence of online banking grow, the regulation around that has had to become tighter and tighter. The Banking Reform Act in 2013 in the UK, specifically introduced measures to enhance competition in the banking sector because before banks were very proprietary around their customers' account information, and they made it very difficult for their customers to move from bank to bank. And when a bank had a customer, they could pretty much be rest assured that that account would be with them certainly for if not for the life of that individual, but certainly for a very long time. But that created stagnation in the market, and certainly the UK wanted to increase that, which led to the formation of the Competition and Markets Authority, which initiated the reforms and reduced some barriers. We saw PSD2, the Payment Services Directive, especially PSD2, encouraged innovation in the payment services and facilitated the entry of new players, including the challenger banks and the account service aggregators. Specifically in the UK, we saw open banking driven by the CMA, mandating larger banks to share customer data securely. Now, you would have thought that those words wouldn't belong in the same sentence, share customer data securely, but that was certainly the mandate. And if memory serves me correctly, Adam, Ping delivered the open banking sandbox against which all of the UK banks were tested for their compliance to PSD2. And I think now many of the CMA 9 are Ping customers. Certainly between eight of those organisations, I would suggest are. But as you've already highlighted, those initiatives brought up lots of challenges. We're talking about sharing customer data securely, so we need to talk about consent, we need to talk about authentication, we need to talk about transaction signing. And in Europe, or mainland Europe, the Berlin Group was set up, by a number of banks on the continent, of which some UK banks contributed, just to talk about the access to account API and what that API should look like. So a huge amount of resource and thought went into PSD2 specifically. So PSD talked about the access to account API, talked about strong customer authentication, SCA, and of course, consumer protection. But PSD2 continues to evolve, and now we've got PSD3 on the horizon, which will focus more on the payment services providers. And there are new rules for the authorization and supervision of non-bank PSPs. As well, and even more importantly, as you've highlighted, new anti-fraud requirements, because it seems fraud is a never-ending story. And I've also got some stats a little bit later to share with you just about how fraud in the financial services industry is becoming a super important problem that we need to look at and solve. So, PSD2 was considered to be a revolution. PSD3, the European Commission's talking about that rather more as an evolution rather than a revolution. So perhaps good news for financial services organizations that they don't have to do something major or something as major as open up customer account information. But certainly digital transformation across all industries is driving a lot of the change. Mobile banking, online payments, blockchain, that's also helping to reshape customer interactions. A customer can now move accounts so much easier. So customer retention is a big something quite major. The regulatory environment, that's had a profound impact. Stricter regulations aimed at protecting, us as customers against crime, but we also need to think about GDPR, how that plays into what we're doing, because GDPR means that we have the right to be forgotten. So that has its own challenges. But with anti-money laundering regulations and now DORA, it seems that the regulations are just piling up and piling up. But traditional brick and mortar banks, also have the fintechs, and the insurance companies have the insurtech companies, or unicorns, hopefully, that they're competing against. So there's also this arms race happening. How do the more traditional banks keep pace with the more innovative banks that are perhaps often offering more customer centric solutions, which is driving this this innovation.
Yeah, it's just interesting you say that, because I think that
Yeah.
that level of competition as well that you allude to is super fierce. I mean, when I go into a branch, which is quite seldomly, I may add, and I
Yeah.
see those big boards behind the cashiers showing customer experience metrics, you actually see the digital banks at the top, and you see the incumbents
Yeah.
towards the bottom, right? It just makes you think about that.
Yeah, and the traditional brick and mortar banks, and I'll call them brick and mortar banks to differentiate from the from the newer banks. We see that affecting their business model as they try and transition from a less of a face to face experience. I can't remember the last time I went into a bank to actually conduct business. I do everything online, and that presents its very unique challenges, because traditionally we would have gone into a bank, the bank cashier would have known us, we'd have known our bank manager, and I'm old, so I recognise that. So as they say on the internet, no one knows a dog is a dog. So no one knows if you're a potential fraudster trying to access someone else's bank account via the internet. So yeah, it's all it's a constantly evolving landscape, and you add in cryptocurrency, data analytics, and then the Generation X having an increased focus on sustainability and environmental factors. So it's so many different angles and facets to look at this.
Gosh, well, there's a lot to think about there. I mean, that's just the landscape. We haven't even really got
No,
into talking
it's
about where
yeah,
identity fits into this. I
yeah,
mean,
yeah.
I think that sets us up pretty nicely actually for talking about this kind of concept of identity and access management modernization. And again, it's a fully loaded word. I fully appreciate, but as I mentioned, I think identity has always been a kind of for want of a better phrase, a two-edged sword in the financial services industry. On one hand, these weak credentials and access blind spots, as we call them, provide really fertile ground for malicious actors to
Yeah.
wreak havoc, and not just to compromise data, but access mission critical
Mm.
systems. And we've seen the financial services as being one of the most targeted industries, perhaps just outside of healthcare. But on the other hand, there is this kind of on the other hand of that equation, there is this kind of notion that enterprise grade identity can really be the first line of defense against these malicious attacks. And again, regulations is pushing the industry pretty much in that direction. And as decision makers go along with that, they need to really be quick on their heels and thinking about how to transition. And in some, when I started doing this many years ago, I presumed that the big banking players had it figured out. Actually, I couldn't be more wrong. There's just so much legacy and so much complexity institutionally within those organizations and the growing ecosystem that actually those decision makers are really looking to cut across that, and they're looking to move quickly on that modernization agenda. And very importantly, that doesn't just mean moving quickly within their ecosystem to take advantage of these first party access risk signals, but also to be able to use a plethora of third party risk signals to help them identify those threats and be able to mitigate them in real time. So it's
Yeah.
all of a sudden extensibility becomes a real
Yeah.
issue, right? And again, before I joined Ping, I was working for another company, I remember some banks are taking 4 to 6 months to integrate with a biometrics provider. I mean, that just is not good enough and not fast enough. So again,
Yeah,
time to value is becoming a really important aspect. And then there's the kind of notion here, which propagated very largely in retail, this notion of composable architectures. How can those ecosystems grow and allow those providers to be able to take certain modules and certain aspects of that architecture to be able to move others at multiple speeds. And then we'll come on to this in a minute, Jason, and this notion of orchestration. So orchestration, again, another
yeah,
fully loaded word. Ultimately, the way we see it, orchestration is about building, testing, and iterating access
yeah.
journeys, being able to do that really, really quickly. So yeah, just wondered what your kind of thoughts on that are, Jason.
You know, when we talk about giving access to account APIs, then we're immediately thinking about we have to immediately think about security. I think the challenge that a lot of the bricks and mortar banks have, and lots of other industries have, is identity and access management really started in how do we control our workforce, i.e., how do we give our workforce and our workforce users access to the applications that they need to do their job. And workforce identity was all about not giving the user choice. I'm in a particular role, I do this job, and therefore I need access to these applications. And customer identity is the exact inverse of that. It's all about giving the user choice. It's all about giving the user the ability to do what they want and interact with your brand as much as they want to. And you want that experience to be frictionless and easy. So you're very often organizations have tried to take something that was built for the workforce and twist it and bend it and configure it in a way that would work for consumers. And organizations like Ping very quickly came to the realization that, and we can talk about the convergence of workforce and consumer identity, but invested a lot of money in being able to present these very specific use cases and functionalities for consumer identity. But with that comes a lot of you've got to get your security right, because when you're giving third parties access to account information and you're giving them access to people's most personal information, you're giving them access potentially to their money, to their spending habits, to their financial health. And as consumers, we want that data to be kept safe. So, identity and access management, has to be crucial. Is a crucial component for ensuring protection of that sensitive data. So, when you're looking at consideration, the considerations that you have to look after data protection and privacy. You've got to be able to comply with the regulators. You've got to around identity governance from an employee perspective. You've got to have your fraud detection and hopefully fraud prevention as well. And then add cloud security on top of that and threat intelligence integration. You're just creating the onion just keeps on getting bigger and bigger.
Yeah, no, it's challenging. I mean, that's just the security angle as well, right? And then there's another angle that I think we need to talk about, and that's value, right? So this is
Yeah, yeah,
something that I'm really passionate about. Many vendors, not just in identity, but generally speaking, just lead with product and features. And actually, for us, what's really important is, we see that identity is effectively an enabler of business value, and I think bringing it back to value is really really important. And actually, from if you look at this in the financial services space, most identity and access management decisions were historically made in IT departments, right? And the agenda is very different and very focused around different metrics and different goals. And frequently that led historically to ROI questions. Okay, what's that investment driving for us? How is that going to be sustained? How is that going to continue to drive value for us? And actually, as to your point there, as digitalization in financial services picked up pace over the last 8 years, and as those consumers have moved from brick and mortar to digital and hybrid channels, all of a sudden customer experience becomes critical. And as we
Yeah.
know from the challenger banks and neobanks, customer experience could be a differentiator of why customers are leaving, one set of banks and moving to others.
Mm.
And all of a sudden, identity is about elevating that experience. To your point, they're moving from that workforce mindset of of zero trust security, to all of a sudden giving consumers choice. And
Yeah.
so, certainly, we've noticed that the buying committee that makes these decisions on all things identity related has really, really changed over the last few years. Not only has it grown, but it's also extended beyond IT departments to lines of business. So all of a
Mm.
sudden, you're having multiple decision makers in that process. And one of the biggest challenges is not necessarily around how do you make the technology work, but how do you align those stakeholders? I
Yeah.
was at an event in Frankfurt last year where a CISO event, and most CISOs were saying, "Hey, our biggest challenge is to get people around the table to talk holistically about how we can make our investment decisions." So, it's really important to make that holistic kind of approach and build that viable business case. And I've displayed here on the slide so the metrics that we see our financial service customers benefit from, like increased engagement and decreased login time and reduced abandonment and reduced friction with call center when trying to call up to get password reset, when actually you should have the ability to do that yourself. And also, to your point there as well, significant impact on fraud reduction. So um, I've certainly seen the most progressive financial service providers really make a holistic case. And the big players, they're not looking at 1 or 2 years. They're looking at 10 to 15-year horizon, which for me
Mm.
is quite staggering. And so if you don't really make that business case and you don't have it wrapped up, then how can you drive ROI over that kind of period of time? So
Mm.
yeah, what's your perspective on that, Jason?
I'll probably start at the right, because risk and fraud is such a huge topic. There are now in the UK more incidents of fraud than any other crime type, and I believe, and I'm reading my notes here, the UK APP fraud accounted for 40% of all fraud losses in the UK. Now, if you take into consideration that from 2022 to 2023, fraud doubled in the UK and doubled to 2.3 billion pounds. That so calculate how much of that was APP fraud, and you have an incredibly huge number. And that is a number that every bank has to get down, because it's just money out of the door, and there's legislation coming into play, and you can have a look at the the payment systems regulator reporting on APP fraud performance data. How many fraud losses are refunded by value because APP fraud has to be refunded. Um, so that just represents a pure loss to the bank, and banks and financial services organisations need to plug that, because it's only getting worse. And one of the reasons it's getting worse is with the advent of AI, another multi-headed hydra. So that's definitely, if you're not focusing on reducing the impact fraud has on your business, then you're missing an opportunity to put money back to your bottom line. But saving money through consolidation, and I know we're going to talk about that a little bit later, is imperative, um, because everyone wants to take cost out of their business, and there are opportunities to take cost out, especially when you're talking about a lot of legacy debt across organizations. But there is also an opportunity to make money. There is a good side to this bad story as well. There's a way for you to increase your operational efficiency. There is a way for you to to retain customers, to increase customer engagement. And these are all ways by having the right way to interact with your customers. It's always an opportunity to make money, and this is the challenge. How do you balance taking friction out of that experience whilst still maintaining very, very high security? And I think we'll talk a little bit more about that on the next slide.
Yes,
But it's not
definitely.
all doom and gloom.
No, no, it's a challenge though. It's a challenge, and again,
Yeah, it is a
I
challenge.
think,
Yeah, definitely.
I think to your point there, I think we come on to orchestration here as well. And I think orchestration has a big role to play in driving those challenges. So again, historically, what we've seen in financial services industry with legacy identity access management is what we call code-heavy access journeys. So this is idea of, if you are building a complex multi-factor authentication flow or step-up authentication flow, or if you're using biometrics, that tends to be in legacy mostly hard-coded, right? So it doesn't allow those banks to pivot. It doesn't allow those banks to also look at what works and what doesn't work, right? Because as we know, frequently these are calculated decisions, and we need data points to be able to make informed, objective decisions. So orchestration is really a key driver in that space. And then, most identity vendors, including ourselves, we provide this kind of comprehensive tooling to be able to help to build what we call no-code, low-code access journeys. This idea that you can build an authentication or authorization or a delegated consent journey. You can build that for drag and drop with the ability to configure to your environment, and then you can deploy that, whether that's in a test or production deployment setting, see how that journey works, and then make some informed decisions. Well, actually, if we're going to introduce a step-up factor that uses YubiKey and that's driving our customers and driving abandonment, then perhaps we should be using a different factor of authentication or step-up, right? So that's just an example of that. And the other thing for me here that's really important, we talked about this extensibility in the growing ecosystem. Again, by being able to use these third-party biometric and risk management capabilities out of the box, you can connect them to the journeys and you can see what value they add rather than having to integrate with each vendor one by one. So again, there's the power of kind of no-code, low-code orchestration. I think if we bring it back to business value again, ultimately, by being less code heavy and code dependent, not only are we improving agility, not only reducing time to value, but also we're significantly reducing total cost of ownership, because ultimately we don't need those specialized resources. And let's be honest, we speak to developers as well. A lot of these developers say, you know what, this is old tech. I'm not going to spend time on this. I want to go to new tech. And so it's very difficult to find these specialized IAM resources that know legacy IAM. So again, orchestration is really important in that journey. So I don't know if you had any comment on that, Jason.
Yeah. Certainly, in the last few years, I've seen orchestration. I want to use the word revolutionize again, but it certainly felt like that. The first time I saw an orchestration engine and what that orchestration engine could do, it literally blew my mind. Because what orchestration allows you to do is it allows you to take it allows you to take the intelligence of a customer journey out of the application and extract it in such a way that your applications don't need all of that intelligence hard coding into it, which can ultimately support you in making data-driven decisions, because orchestration, is a way for you to bring in and evaluate data from multiple data sources. That could be a fraud detection system. It could be any type of system. It could be part of your. It could allow you to use identity verification as part of an authentication journey, which doesn't tend to happen. So orchestration gives you the ability to build these complex customer journeys and build in what if and when, make this happen. So if a user wants to open an account and they're presenting this type of document, what do I want that experience to be? And this is particularly important, especially when you consider some of the vulnerabilities that we see. I remember there was a Samsung vulnerability a couple of years ago where basically you could use the biometric fingerprint authenticator, and Samsung would let any fingerprint, it would authenticate any fingerprint on any device, which opened a massive flaw. Now, the banks that had got all of that hard coded into their applications had to take their applications offline and start working to fix that problem. Now, you shouldn't underestimate, the length of time that it takes to do that. Some banks had their applications offline for weeks, if not months, whilst they were trying to fix that problem. Orchestration would have been a way to solve that problem because it gives you the ability to swap out and swap in authentication methods independent of the underlying uh, identity and access management infrastructure. Orchestration can also be seen as a way to migrate away from one technology to another technology with zero impact to the user base. So leveraging orchestration properly, you can help you navigate complex IT landscapes more effectively, and be very, very specific around customer journeys, which then increases that stickiness. It can help remove friction, and allows you to be more agile and deliver a more optimized resource utilization internally. So lots of things that orchestration can help you with there. Yeah, absolutely, really
And
important.
it's interesting you mentioned that the Samsung example. So there is not. I know this is not highly relevant for financial services, but actually it kind of is. So we've been working with a very well-known global retailer. I can't name them unfortunately, but they used orchestration to actually find out that how long they keep sessions open for
Yeah,
significantly drives their
yeah,
conversions.
yeah,
And they noticed that actually by signing people out of active sessions, you're driving a drop, you're driving attrition.
yeah,
And so they decided to, in orchestration, to get that data, to get those insights, and actually say, you know what, we need to change how long our active sessions are signed in for and when they terminate, balancing security against customer convenience. And they managed to drive, I think it was in the region of around $30 million in value just by doing that. Again, so
mm.
to your point there, this is super important. Okay, well,
you know,
let's move on to this notion of convergence. So we mentioned convergence on a couple of
mm.
occasions, and I've certainly seen convergence used by analysts principally in the workforce identity and access management realm. So this is the idea of being able to converge, workforce access management together with identity governance and administration into one. But actually, if you look at convergence, some of the things that we discussed today, Jason, convergence goes way beyond that. I mean, convergence can be a convergence of use cases as far as
Yeah,
consumer workforce and third-party provider use cases is concerned. It could also be a convergence of services that run. And on this slide here, you see all the kind of services that we deliver out of the Ping Identity platform, right? And typically, historically, you'd have those providers effectively, use different providers, and then have this challenge of, great, well, how do we connect that? How do we drive a seamless
yeah,
experience? And then on the flip side of that, how do we manage our total cost of ownership for that and our commercial relationships with those different partners? So that's really kind of critical. And I think also, if we look at convergence, we could also talk about deployment models. So again, there are some providers out there that are cloud first, and there are other providers that are self-managed first. Ultimately, in financial services, what we've seen is that those customers are looking for flexibility. They're
yeah,
looking to be able to access all these services, meet all identity use cases, and use any deployment model. So whether that's self-managed, hybrid, or even SaaS, whether that's single tenant or multi-tenant, depending on the rigors of the security requirements. So that convergence is really becoming an important consideration for providers as they
mm.
look to transition. So I wondered if you've seen that at your end as well.
Yeah, that's a really good point. It's convergence at so many levels, because there are sets of common services between consumer and workforce identity. You're going to want to have single sign-on. You're going to want to have federation, potentially centralized policy management. You're going to want to be able to leverage adaptive authentication, risk-based access. It doesn't necessarily matter if that's a um, these are common services that should be available to workforce and consumer identities. Obviously, you're going to want different rules and different policies based upon those different types of identities. So there's certainly value there in looking at how you can take a more holistic approach to identity management, access, not only identity management, but access controls and also security practices. So consolidating IAM technology, adopting a unified governance model, gives you the opportunity to do that, and that can enhance your security posture. It can streamline compliance efforts, and also, enable those digital experiences and users, for users and customers. But fundamentally, though, in order to converge, you need to be investing in standards, and this is something that Ping has always been incredibly good at, is investing in security standards. Because if you're not leveraging standards, then it's very difficult for you to have on-premise software, have workloads in the cloud and in the public cloud, and potentially have workloads in a private cloud. So yeah, investing in this, open standards is the first way, and I think a lot of organisations have made a tremendous headway in the way they do that, because then that enables single sign-on, federation, authentication. You put orchestration. I'll mention orchestration again on top of that, and you're really starting to get a really big bang for your buck.
And Jason, I won't even mention that, the future landscape for identity. I mean, there's actually our CEO frequently talks about how decentralized identity provides opportunities for convergence between identity verification, authentication, authorization. So all of
Yeah.
a sudden you start thinking about that from a future landscape perspective, and that's really exciting as well.
It
Um,
is. Yeah, and again, I'll mention orchestration again. It is about this end to end, the ability to manage this end to end customer journey, and bringing in, identity verification, data validation, because you have to do your KYC, you have to do your know your customer checks, you have to do your anti money laundering checks, you have to open an account. An orchestration and can make that so much easier, and convergence around a suite of solutions can further make that a lot easier. But you want me to talk about Raiffeisen International Bank?
Yes, we do indeed. Well, when we're kind of preparing for this webinar, thinking, hey, what's the added sum of Ping Identity and IC Consult? And actually, we've got a juicy kind of case study here in Raiffeisen Bank, and Raiffeisen Bank are an exciting bank because they serve over 70 million customers across Europe. They deliver across 12 banks in Central and Eastern Europe, and they've been working with Ping and IC Consult for a number of years. So, Jason, do you want to tell us about that a little bit?
Yeah, and I think, and I've got some notes about the numbers, and if anyone's interested in getting a white paper, getting a reference with a reference case study with these numbers more accurate, and laid out how we calculate them, we'd be more than happy to send this to you. But we are using just a fraction of the Ping suite. The services from IC Consult were leveraged as well. But as Adam said, this Raiffeisen Bank International, 12 subsidiaries across 12 countries, speaking 12 different languages, not necessarily 12 different identity and access management platforms, but certainly a very heterogeneous environment. As Adam's already said, lots and lots of identities. And this was proving a challenge to the bank because with so many different languages, so much heterogeneity, in the across the organization, it was very, very difficult for them to drive innovation and digitize the bank. When they did the calculations, had they done this, had they let each bank do their own implementation, it would have been incredibly costly for the bank. And as I say, we've got some data on that. But yeah, and then there's, obviously the bank didn't want to compromise on security and compliance. So there's a strong desire to innovate and digitize the experience, but basically legacy is preventing them from doing that. Extensive market research from the bank side certainly led them to look at Ping Federate and Ping Directory. So Ping Federate, single sign-on, token translation engine. Ping Directory, pretty much what it says on the box. It's a directory service, and those two solutions working in conjunction to deliver a shared central service platform for authentication and authorization. Very early on in the process, they chose IC Consult, and I'll tell you a little bit more about IC Consult later. But we drove a lot of the business analytics and the implementation within the organization, because Raiffeisen absolutely wanted outstanding resiliency, stability, and performance, especially across such a large geography with so many identities. So the bank chose Ping Federate and Ping Directory as the underlying technology components, chose IC Consult to do the implementation, and we helped them realize an incredibly fast time to value. And we delivered the project, including including everything around that, for less than a third of the cost that they originally forecasted, if they'd let the banks do this on their own. As I say, if you want to see the workings, it's all in the case study. So now, scalability to 17 million identities and beyond. Absolutely top-notch security with no compromise, improved user experience, and we're now the group, or rather Ping Identity is now the group-wide standard for customer identity, enabling that innovation and digital modernization that they were really looking for. So if we can transition to the next slide, I'll tell you a little bit about IC Consult as a business. IC Consult, we like to say that we stand out from the crowd, and the reason we do that is because we live and breathe identity and access management, and have done for more than the last 25 years. So we're not a division of an organization that has a few people that can talk about identity and access management. There are 850 of us that focus only on identity and access management. And when we talk about identity and access management, we're talking about all the way from business analytics and business consulting, all the way through to delivering a solution or solutions like Ping as a fully managed hosted service. We work with more than 30 banks, more than 40 finance and insurance companies, from Allianz, Helvetia, ING, Raiffeisen, Munich Re, and E-Trade. They all trust our services to run their business. Now, what's their business? Their business is money and protecting customer identity, and that's what we do. We're very, very proud of our NPS score of 91, and that really speaks to the fact that when we're engaged in a project, we deliver that project, and we've delivered thousands of identity and access management projects. And if you think about the fact that an identity and access management professional within an organization might only do 2 or 3 identity and access management projects in their entire career, you've got literally thousands of projects that you can leverage in terms of our institutional knowledge. We know where the pitfalls are in I would suggest any identity and access management project. And we've been recognised by our partners and analysts that we do just that. And particularly exciting, with this convergence of cybersecurity and identity, we are the trusted partner of choice for exactly that. So,
Right,
Adam,
exactly, Jason. That's why we love to love to work with you, right? That expertise, and actually that brings us to who Ping Identity are, and for those of you who are with us who are not really sure, Ping has been around for over 20 years as well. One of the preeminent identity and access management vendors in the space, headquartered out of Denver, Colorado, but operating very much at global level, multiple offices around the world, and extensive data residency. And I think our mantra is ultimately about this converged identity for any vertical, not least financial services. And we really pride ourselves on being able to deliver across all the identity use cases, so consumer, workforce, partner, even machine identities. And I know there's a lot of exciting space with IC Consulting in that space as well. And for us, it's really about being able to deliver that flexible mindset, flexible deployment options, and be able to serve up and drive value across any experience. And that's precisely why we serve close to 60% of the Fortune 100. In the UK, we serve 7 of the 9 CMA 9. In France, we serve 3 of the 5 largest banks. The list goes on. So we have credibility in financial services, but also beyond financial services. So with that, I know, Jason, we're kind of running short for time.
yeah,
So really grateful for everybody who has joined us. And if you do want to find out more, and I sincerely hope you do, that you've been motivated to find out more, we've given you the opportunity there to connect with Jason and myself. We've also signposted you to some really exclusive resources that you could use to further your journey and discovery. But also, there's a really exciting newsletter there from IC Consult that draws on some of the key trends and developments and some of our kind of wins with the customers. So I encourage you to sign up for that. And I think now we have an opportunity of looking at questions. So I'm just going to look at the question console and see how many questions we've had come up. Okay, so let me just have a quick look, Jason, the last remaining moments. Okay. So just one question there around, okay, so in financial services, like where do you see the future of identity evolve in the next few years? How is identity going to continue to serve up future needs in the industry?
oh wow. I think identity and access management, or identity, is going to be key in balancing risk and innovation. It is a double-edged sword. Innovation can introduce risk, so being able to balance that is incredibly important. Particularly on the fraud side, I see potentially banks collaborating more, perhaps even consortia, which is very difficult under GDPR, because if you can identify a fraud vector at one bank, it'd be great if that bank could share that with another bank to potentially shut that down. How we deal with APP fraud, particularly with AI, is going to be something that we're going to have to really invest a lot of time and energy into, because certainly the bank the bank I use uses my voice as my password, which I probably shouldn't have said that, given we should cut that out. Given the emergence of AI, you can have AI basically say anything. So it is going to be this arms race between the bad actors and the banks. So more investment in behavioral analytics, more investment in device analytics, and probably continuous monitoring and risk assessment. There are lots and lots of different areas where identity can play a key role in preventing fraud, but also acting as a business enabler. And that's ultimately where organizations should be focusing, is how can they turn the asset that they have, which is a customer's identity, into an asset, but protect that at the same time.
Yeah, and Jason, just to add to that, it's a great response to a challenging question. We see that there is a balance to be struck there between the short-term challenges that financial service providers are facing and the long-term aspirations and innovation investment goals as well. And again, this is where the concept of convergence can extend, meeting short-term needs and your long-term aspirations as well. So we have some more questions, Jason, but I'm not really sure that we'll get the time to focus on them. I'll perhaps take one more. Somebody's asked a question about APP fraud. That's quite difficult, right? I mean, I know there's a rapidly changing
Mm,
landscape in the UK.
yeah. Mm,
We have the reimbursement rules coming in online very, very soon. And, there's this kind of whole notion of mutual assurance. Certainly we as consumers are expected to verify identity, to go through
mm,
KYC checks and IDV checks at the appropriate time. But also, banks also have to assure us that what we're dealing with are legitimate parties as well. And this kind of notion of mutual assurance that I see really taking root. And again, identity has a role to play in that
yeah.
equation as well. So,
I completely agree. And the biggest challenge with APP fraud, authorized push payment fraud, is it is authorized by the user. The user has been manipulated in some way, shape, or form, either by an email, a threat, someone on the telephone to do something, and that's you're now talking about how do you stop people from doing something that they've been asked to do. Mum, I've been in a car accident. I need £100 now. Can you please transfer this money? Um, Fraudsters play on emotion. There are romance scams, there are CEO scams, there are so many different types of scams. It's really quite mind-boggling. And also, there is, you know, crime. The crime syndicates are heavily involved in APP fraud. It was, I read an article in the New York Times about people literally being bussed across borders and almost being forced into trying to manipulate people over WhatsApp. This is big business, and there's modern day slavery involved in this as well. This isn't a victimless fraud, and it's not non-trivial. It's very, very serious, and something that we as a society need to combat. And technology is a part of that, but also user awareness, user training. And if something sounds too good to be true, it probably is. So by being thoughtful, and also from a technological perspective, asking someone, chatbot pops up and says, "Do you really want to do this? Do you really want to make this transaction? Do you really trust this person?" All really, really important. Sometimes adding friction into the user experience is exactly what you need to do and exactly what you should do. But you need to choose when and where you do that. But yeah, APP fraud is terrible. Yeah, it's really, really bad.
it is, and you know what? I was at an event recently, and somebody threw a stat in there saying that actually the revenue the crime syndicates derive from fraud collectively now exceeds human trafficking and narcotics combined. I mean,
Yeah,
that's a telling
it's
story.
it's
Jason,
terrifying.
it is terrifying. Well, look, we could be here talking all day. I think we ran off a bit longer than planned, but I think we had a fruitful discussion. We're really grateful to everybody joining us. And as I mentioned before, this webinar will be available to watch on demand. So the final thing I just wanted to say is to thank you to all the other audience members who have joined us. And Jason, thank you so much for your time. I really enjoyed talking with
Yeah,
you about these many pressing challenges.
pleasure. Me, you too. Thanks, Adam. Bye bye.
Bye bye.